Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets of the corporate world, and let me tell you, Spire Global Inc. has just dropped a report that has got more twists and turns than a satellite orbit. Buckle up. In this fascinating quarterly report, we are diving deep into Spire Global's financial performance and what it all means for their future. We have a lot to unpack from their recent sales and operational changes to their financial outlook. And before we jump in, if you love getting straight insights from these dense corporate filings, make sure you are subscribed to the channel. We cover these reports so you do not have to. Also join our Discord community, you'll find the link in the description below. Let's kick things off by looking at their latest balance sheet. As of the 30th of September of 2025, Spire Global reported total assets of $224.2 million. This is up from $193.5 million at the end of 2024. Now that might sound like good news, but remember that big jump includes assets from a recent significant sale of their maritime business, which we will get to. Its liabilities also saw a big change, sliding down to $91.1 million in 2025, from a whopping $205.2 million in 2024. This reduction is largely due to paying off debt. Now look at their stockholders' equity. It moved from a deficit of $11.6 million at the end of 2024 to a positive $133.1 million by September 2025. That is a massive swing, primarily thanks to a huge influx of cash from selling part of their business and some new stock sales. It looks like they are building a much stronger financial foundation here. They also have their additional paid-in capital at $601.5 million, which is a sign of strong investor belief. Now let's talk revenue. For the 3 months ending the 30th of September of 2025, their revenue was $12.6 million, down significantly from $28.5 million in the same period of 2024. For the 9-month period, their revenue was $55.7 million, down from $88.7 million last year. This big drop in revenue makes sense when you consider they sold their maritime business in April 2025. That division was a big part of their sales, so its exit naturally impacted the top line. They are now focusing more on their core satellite and data services. And with that revenue drop, their cost of revenue also fell to $8 million from $15.8 million for the 3-month period, and from $55.9 million to $32.9 million for the 9-month period. This means their gross profit also decreased to $4.6 million for the recent 3 months compared to $12.7 million last year. However, their gross margin actually improved from 37% to 41% year over year for the 9-month period. This suggests they are becoming more efficient with the revenue they do generate. Looking at their expenses, research and development costs jumped to $9.1 million for the latest 3 months, up from $5.6 million last year, and for the 9-month period they rose to $27.9 million from $19.1 million. This shows they are heavily investing in future technologies and products which could pay off down the line, but it is a significant expense right now. Sales and marketing expenses took a big dive. They went from $5.6 million down to $2.8 million for the 3-month period, and from $15.9 million to $12.7 million for the 9-month period. This decrease is mainly due to a reduction in headcount following the sale of their maritime business. The general and administrative expenses, though, also increased. For the 3 months, they went up to $13.7 million from $12.3 million last year. For the 9-month period, they shot up to $48.5 million from $32.1 million. This rise is largely attributed to increased professional services for things like accounting, legal fees, and those one-time expenses related to the business sale. Now here is where things get interesting. In the 9 months ending the 30th of September of 2025, they reported a loss on extinguishment of debt of $12 million. This is directly related to them paying off their Blue Torch credit facility and that government loan with the proceeds from selling their maritime business. It is a massive chunk of money, but it frees them from those debt obligations. And speaking of that sale, they booked a massive $154.3 million gain on the sale of their maritime business for the 9-month period. This single event dramatically altered their financial picture for the year, turning what would have been a significant net loss into a net income. This brings us to their net income. For the 3 months ending the 30th of September of 2025, they reported a net loss of $19.6 million. This is a worse loss compared to last year's $12.4 million loss. However, for the 9-month period, they are showing a net income of $76.3 million. This is a huge turnaround from last year's net loss of $54.5 million. Again, that gain from the business sale is the superstar here. Now for the risks. They have a significant portfolio of marketable securities valued at $76.4 million as of September of 2025. While this provides liquidity, it also exposes them to credit liquidity, market price, and interest rate risks. They are trying to manage these, but unexpected global events could still cause significant losses. We also need to talk about global risks. Spire operates worldwide, and changes in political trade and regulations can hit them hard. They mention tariffs and trade tensions, creating uncertainty and potentially disrupting supply chains or increasing costs. They are also navigating a new federal administration and ongoing geopolitical instability. And here is a head scratcher. Their independent auditor PricewaterhouseCoopers LLP resigned. This is a big deal and usually signals some underlying issues. It could shake investor confidence, and they have indeed had to delay filing reports because of this auditor change. They have a new auditor, KPMG LLP now, but this situation is definitely something to watch. Then we have the legal battles. There was a securities class action lawsuit which was dismissed by the judge. That is good news. It seems the claims about revenue recognition and cost characterization did not hold up. There were also stockholder derivative lawsuits which were voluntarily dismissed by the parties involved. However, there was also litigation over the sale of their maritime business, which was eventually resolved with the sale closing. They are also under investigation by the US Securities and Exchange Commission, or CC, which is looking into accounting practices, internal controls, and untimely filings. This SEC investigation adds another layer of uncertainty. Let's look at their key business metrics. Their annual recurring revenue, or AR, has dropped significantly from $103.8 million to $72.7 million, mainly because they sold off their maritime business. They are also strategically focusing on higher revenue customers, so the number of AR customers and AR solution customers has also seen a dramatic decrease, going from 565 customers down to 162. This move to focus on quality over quantity in customer acquisition could really benefit them in the long run. Their AR net retention rate, which measures how much existing customer revenue is growing or shrinking, stands at 86% for the recent period, down from 90% last year. This slight dip is mainly due to a decrease in the value of certain government contracts. While a rate below 100% means revenue from existing customers declines slightly, it is still a decent performance and shows they are working to keep their current customer relationships strong. So what is the big picture here? Spire Global is in a major transition. Selling off their maritime business was a huge strategic move that cleared debt and brought in substantial cash. This has dramatically improved their balance sheet and solvency for at least the next year. They are clearly prioritizing investments in their core satellite and data analytics technology, which is a smart bet for future growth given the increasing demand for space-based data. However, this transition has also led to lower current revenues and a significant increase in operating expenses, particularly in research and development and general administrative costs. The auditor resignation and ongoing SEC investigation are serious red flags that they need to address quickly and transparently. The decrease in their AR and customer count is expected given the divestiture, but their focus on higher value customers is a positive sign for future profitability. In short, Spire Global is cleaning house and redirecting its resources. The long-term potential in space data is huge, but they have a lot of immediate challenges to overcome. The balance sheet is stronger, but the operational performance and regulatory scrutiny demand close attention. We will be watching to see if their heavy investment in R&D translates into the growth they are hoping for, and if they can navigate the current market and regulatory headwinds. Alright, that is our breakdown of Spire Global's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.